Hello students, welcome to MJC Learning. In today's video, we are going to discuss the subject Secretarial Practice for Standard 12th. And also, today we'll learn a new topic, that is important terms related to stock exchange in the chapter Stock Exchange. Important terms related to stock exchange. Students, according to your SP syllabus, there are 18 important terms which are related to stock exchange. But in today's session, we'll study the first 9 terms which are related to stock exchange, and the next 9 will continue in the next session. So moving ahead with the important terms which are related to stock exchange, the very first is broker. Broker is an agent who deals in buying and selling of the securities on behalf of his client. Here, he carries out trading activities with the jobber on behalf of his investors. In simple terms, a broker is said to be a link between the jobber and the investor, where he trades, that means he buys and sells the securities on behalf of his investors. And for that, a broker gets consideration of commission or brokerage. The second term is jobber. Jobber is said to be a dealer who deals in buying and selling of securities, where a jobber carries out trading activities only with the broker. Students, this is because a jobber is restricted to directly buy or sell securities in the stock exchange. Also, he cannot directly deal with the investors. And a jobber gets consideration in the form of profit. Third term is bull, which is also known as Tejiwala. Bull, he is said to be a speculator who expects rise in price of the share in the future. It means a particular kind of investor who purchases shares in the expectation that the market price of that company's shares will increase. In simple, bulls buy at a lower price and sell at a higher price. For example, if a bull buys company shares at rupees 100, he would prefer selling them, that is, selling the same shares at a higher price than the 100. Bear. Students, bear is the opposite of the bull, where a bull is a speculator who anticipates rise in the price of the securities, but a bear is a speculator, but he anticipates fall in the price of the securities. Yes, students, a bear is a speculator who expects fall in the price of a security. Hence, he sells his securities at the daily market price to avoid loss. This is because he expects further fall in the price of the securities. Fifth term is stag. Stag is a member who buys security from the primary market. It means a stag is a member who buys new securities from the primary market and he sells them later at higher price when securities are listed on the stock exchange. Next term is lame duck. Lame duck is said to be a bear broker whose expectations have gone wrong and make loss in his dealing. In other words, lame duck expects the price of securities to fall. So he sold his securities, but instead the price have gone up. Wolves. Wolves, he is said to be a broker. But students, wolves are also known as a smart speculator. This is because wolves are the powerful investors, or we can say they are the powerful traders who use unethical means to make money from the share market. Thus, wolves, he is a quick to judge the trend in the market and according to that he trades quickly by making profit. Eighth term is settlement. Settlement, in simple term, it refers to the security-wise netting of trades by a broker, but it is done after the trading period is over. Ninth is contract note. Contract note is the legal record of any transaction that is carried out on a stock exchange through a stock broker. It is a note given by a broker to his client. Hence, it serves as the confirmation of trade done on a particular day on behalf of a client on a stock exchange. It is a specific form which validates the transaction. Both broker and client will have one copy of that is of contract note immediately after the transaction is done within the 24 hours. So students, these are the 9 important terms which is related to stock exchange. Next 9 important terms which is related to stock exchange will continue in the next session. Thank you.